Mr. Varghese, you're still under oath?
Yes, Commissioner.
Thank you, Mr. Commissioner. The witness ended at paragraph 11.24 before the lunch adjournment. He may proceed from paragraph 12 on page 14.
Thank you, Commissioner. The IO investment case. The IO investment case was premised on AEEI's strategic holding of a 30% stake in BT South Africa that would be acquired by IO using some of the proceeds of the capital raised in the IPO. Significant BT clients with multi-billion ICT budgets were seeking to address their preferential procurement through supporting truly transformed ICT providers. Additional scope would be given to those service providers that showed true transformation initiatives, specifically ownership criteria. Thus, there was a gap in the market for a truly empowered IT company, and the most empowered company would be IO. Post-listing, black shareholding of 70.5% and black female ownership of 32%. There would have been technology transfers between BT and IO and sharing of IP. They would have hired ex-BT SA CEO, Mr. Kevin Hardy, and ex-EOH Division Director of Industrial Technologies, Mr. Sipiwe Nodwele, as its CTO. Furthermore, consolidation of players in the industry using the cash pile from the IPO. IO had a pipeline of acquisitions with revenues of 3.5 billion and average EBIT margin of 18%, attaining a market share of 4 to 6% of 227 ICT market in South Africa as estimated by Gartner. So in substance, again I repeat that it was similar to a special purpose acquisition company, meaning the funds raised was going to be used for acquisitions to fuel growth. The IO valuation. The IO valuation was based on the premise that we expected it to win market share in the IT and related services industry due to its superior BE credentials. A key pillar of the investment thesis was the acquisition of BT South Africa and bolt-on acquisitions thereafter, winning more businesses on that platform using BEE credentials. In a sense, IO was like a special purpose acquisition company, SPAC, that would raise funds from the market to pursue specific target acquisitions, using those funds to grow the business. The PLS gave broad outlines of around 10 businesses that IO was targeting. A key challenge was the lack of historical financials of BTSA, but the PLS included pro forma forecasts that included BT, which were verified by reporting accountants Grant Thornton. Based on the forecast revenues presented in the PLS approved by the JSE, IO would have had a modest market share of 3.4% in 2019. The market forecast was given in 12.7. We then used these forecasts and peer group analysis to determine a normalized price to earnings valuation. In order to calculate a normalized earnings number, one would project earnings forward to a normalized level, 3 years in the case of IO, since the first 2 years had substantial acquisitions, and then discount it back to current level. To determine the normalized earnings, one would have to determine an average margin, which is EBIT over revenue, and apply that to forecast revenue. Note, EBIT means earnings before interest and taxation. To determine the margins, we used industry peer groups. These had EBIT margins ranging from 7 to 25%. We used the EBIT margin of around 15.5% as a base case for IO, given its focus for higher service offering. We then added profit from associates and deducted tax to get to net earnings. We used EOH as a proxy because that company had, up to the valuation date, been highly acquisitive. EOH's peak 10-year EBIT compounded growth rate was approximately 41% at the time of our analysis, and the stock traded at 22 times price to earnings multiple, which is a 10-year median. As a result, Adapt IT was also used as a comparison. We applied at 28% to discount to this PE. The table below shows the 10-year median PE of the comparables. What we use for IO, again, we give the peak 10-year EBIT compound average growth in, or average growth rate, and then the periods used, and how many acquisitions we were thinking of in the pipeline. The normalized PE valuation gave a base case of 43 Rand per share, i.e. derived EPS of 268 per share multiplied by 16 times PE. Mr. Siani is very familiar with the normalized PE valuation methodology, and it is his preferred approach when he values companies. We also did a DCF valuation as a backup, but this was not annexed to the PMC submission of 20 December 2017. The DCF valuation indicated a fair value of 45.29 per share. Another valuation method used in his model was EV to EBITDA, which indicated a fair value of 47 Rand per share. The IO transaction.
A question?
Yes, Commissioner.
Yes, it's quite interesting that when you look at the two other companies, their PEs are similar.
Yes.
22.6, 22.9, but their earnings growth, the 10-year earnings growth, the compound earnings growth is very different. I mean, the other one is almost double that. What,
Commissioner,
I know the market doing this, but
it
seems to be, out of kilter a bit.
Commissioner, my response to that question would be that, yes, it's true, EOH had grown historically 41%, right? And yes, Adapt IT grew 25% historically. But from that point onwards, maybe the market thought both were growing at similar rates, and hence the 22.9 and 22.6. I would assume Adapt IT is slightly higher than EOH in that table.
The IO was pegged at 32% growth. Was that based on the value, on the deals that you guys were looking at, or it was just a extrapolation?
You see, Commissioner, Victor did basically a 10-year forecast or more, and we have it on file. We have given it to the evidence leaders. So I think he calculated that number for that full forecast period.
But was it based on the deal pipeline, it looks like?
Yes.
Or
no,
just on a normal extrapolation?
So what we did is, for the explicit forecast in his model, had his assumptions, and then we compared it to what the management forecast was, and it wasn't out of kilter for that explicit forecast. And then we reversion to mean is what we term it. So we slowed it down into the period beyond that. Yeah.
And the PE, you gave it a PE of 16. Just if you could explain to us there also.
I suppose the 16 PE was derived on the basis that to be on the cautious side. And also remember, we didn't he didn't have at that point in time the full BT financials. We relied on what was in the PLS. To just give some color, Commissioner, on the BT financials, eventually, say the second half of 2018, they did come to the PIC. They brought the file with the BT financials, but we were not allowed to take pictures or anything like that. But we were, because the NDA was still in place between themselves and PLC, BT PLC, right? So Victor did capture the numbers he wanted, and he was satisfied that they agreed to what was in the PLS.
Okay, yeah, thank
Number 14, the IO transaction PMC meeting of 20th December 2017. The committee resolved to approve the waiving of the due diligence approval process, the PMC1, and the combining of the PMC1 and the PMC2 approval process. The committee further resolved to approve the acquisition of a 29% stake in IO Technology Solutions Limited for a consideration of 4.3 billion rand ahead of its listing, subject to the PIC and IO entering into a put option to protect PIC's clients against a share price decline. A commitment that IO will spend the equity funds raised only on acquisitions for growth and within 24 months. The legal and ESG teams performing a complete due diligence and providing feedback to the PMC listed investments. IO implementing a conflict of interest policy. The appointment of independent non-executive directors to the board of IO, and shareholder approval for all acquisitions other than BT that are greater in value than 10% of IO's market cap. Conditions 2, 5, and 6 are typical of conditions that we impose on a special purpose acquisition company when we invest in it, meaning that you will spend the money only for on acquisitions for growth, and there's a time frame of 24 months, which is also applicable to specs. Then number 5, to have a properly constituted board. We did engage with the chairman, and our ESG team had interactions with them, and they changed their board structure accordingly. And then number 6, saying that you must come back to shareholders for any acquisition greater than 10%, and we must give you the nod before you invest in such target companies. Now, point 15, subsequent events to the 20th...
A question
Commissioner.
again. Looking at 13.9, yeah, in terms of the numbers that came out from various valuation methods, yeah, 13.9. Would it be right to say the valuation per se was not an issue? The issue was more like the processes followed and the BT, transaction didn't happen. What I'm trying to say, do you have issues with the valuation? Or, or issues are somewhere else?
Commissioner, I think...
Or including the valuation even.
Commissioner, remember these were our views put to PMC. And now PMC, after having looked at the risk report, etc., came to a view that perhaps it was on the expensive side. And therefore, they insisted to have a put option. I think it was well discussed in earlier submissions here that, was it a wise thing to have a put option after the deal, So I shall not go into that.
So because of the price, they just said, we'll follow the price, but let's have a put option on that.
Yes.
Is that what?
That's my understanding, Commissioner.
Okay. All right.
Subsequent events to the 20th of December 2017 on IO. On 29th March 2018, the PIC met with IO non-executive Mr. Salim Young, Kevin Hardy, the IO CEO, and Mr. Sipiwe Nodwele, IO CIO, and Mr. Khalid Abdullah, who is the AEI CEO, and he's the shareholder representative, to discuss the 5 conditions. I was not in that meeting, as far as I recall. And then the 4th and 5th of May...
Sorry, before you move on from that point, this just reflects that there was a meeting to discuss the so-called press, your questions of your conditions.
Yes.
Obviously, the outcome of that did not reflect that the conditions were accepted, because
No.
other information was that this has never really been implemented, and if you've got, you'd already, in essence, the horse had bolted. What actually occurred in relation to all of these people who were part of that meeting, and did they give you, at any point in time thereafter, undertakings to meet the conditions precedent?
Commissioner, if I may respond. Yes, they were happy with the appointment of the board with majority of non-executive directors, and then a commitment that if they spend anything over 10% of their market cap, they'll come to us. I mean, if you looked at the latest reported financials, I think in August of last year, they had not spent that money. So it was, I think, if I'm not mistaken, they had 4.5 billion or something like that. So they had not yet done a deal. So, but they had given us a commitment that they will come back to us. The only outstanding point at that point in time was the put option, which went into a serious to and fro, and eventually was concluded towards the end of 2018. I think October. I will touch on that put option in the next few paragraphs.
So what you've just raised asks the question for me: what was the urgency? Was the urgency because you had to have the deal, and at what point did you know that the BT transaction was not part of it? Because if we looked at the evidence that has come before us, there wasn't the liquidity. The liquidity had to be created to be able to provide the 4.3 billion. When they did the deal, they had to write to the JSE saying they don't have the funds, although they said they had the funds. And yet, from December to August 2018, the 4.3, 4.5 is still sitting in the bank with no deals.
Yes.
How does that relate to the strategy, the acquisitions, the efforts made to provide the funding
Yes.
in such a short period of time, and under that kind of pressure that you were all under, and yet then it just sits in the account?
Commissioner, if I may respond to that. Look, we have asked them, why have you not concluded the BT deal as of today? So the response that we've been given is that now that a negative publicity has been raised with this whole transaction in the media, etc., BT has now got second thoughts whether they want to be associated with the IO name, and perhaps they might consider it at a later stage when things have cooled down, but not at this point in time. And secondly, they have the alliance already with AEI, which owns the 30% already, which is in that stable, and they have subsequently won contracts with Sasol, etc., using that alliance.
But they had the alliance before the deal.
Yes.
So therefore, the argument that they had to have a BE to make the deal falls away, because if they had it with that, if the structure is valid now, it was valid then.
Commissioner, my response would be that the expectation, as per what was said in the PLS, was that not only would deals like Sasol be there, but assuming things had been smooth and been sailing as expected, then it would create more momentum and more market share gains for them. Then around the 4th and 5th of May 2018, internal audit notified Mr. Madawa and Mr. Mulabatsi about the audit finding on the IO approval process followed. Internal audit informed them that the PMC that approved the transaction on the 20th of December 2018 should have ratified the transaction, not approved, as the irrevocable subscription form was signed on the 14th of December 2018. On the 7th of May
Sorry,
2018.
can we just check here? On 15.2,
Yes, Commissioner.
inform them that the PMC approved the transaction on the 20th of December 2018, 2017?
2017, a typo. My apologies. Both should read 2017. Then 15.3, on the 7th of May 2018, a PMC submission was made asking for the approval to be changed to ratification. On the 11th of May 2018, PMC changed its approval to ratification of the IO transaction via round-robin resolution. On the 8th of October 2018, a memo was prepared advising against signing the IO put option. May I pause there, Commissioner? Yes, there were several versions of the put option presented to the PIC, and all were not favorable for the PIC, and we pushed back. And eventually we wrote a memo to the CEO to capture our thoughts versus what the company was proposing. And after that, a decision was made by the CEO himself on the 16th of October 2018, and he signed the put option.
Clarification on that. That was the put option that you had done the memo. There were no changes to that, that you had done the memo to say this is unfavorable to the PIC?
Yes.
And that option, who actually worked the numbers? Was it from the PIC side
No.
or it came from the other side?
It came from the other side as a proposal, and we read it, and we said, we happy or not happy. And at the back page, obviously, if you are happy, you have that signature line with witness thing, you know. So I think the CEO signed that on the 16th of October.
And he never sort of communicated back with you guys, say, I'm going to sign this, I've heard your views, but I'm going to sign this.
I don't recall, sir. I don't recall. I would be lying to you. Yeah. Number 16, steps done to safeguard the investment process. Appraisal documents. Pre-due diligence document was compiled for submission on 5th of December 2017, but was not submitted for meeting of 06 December 2017 due to not being reviewed by the GM in time. A subsequent document was submitted for permission to do due diligence on the 13th of December 2017, but appraisal team did not have an opportunity to present to PMC since there was no quorum. Post-due diligence reports were submitted by the 15th of December 2017 for a round-robin approval and subsequently tabled at the PMC of 20th of December 2017 after a desktop due diligence was conducted by studying the pre-listing statement and other information shared by IO by the listed equities, legal, ESG, and risk teams. This meeting also waived the requirement for PMC1 as stated in 14.1. It is on record that the listed equities team requested the company to postpone the listing to the end of January 2018 to give ample time to consider the investment. Acting General Manager Mrs. Haniwe Adams pointed out to the CEO on the 19th of December 2017 that the PMC has not approved the subscription and if she could go ahead with the settlement. The CEO asked her to proceed and stated that PMC will be asked to ratify. The Investment Administration Division requested Mr. Siani to document that the PMC had not yet approved the transaction when they were approached to start the settlement process. It is sad that the action of the CEO to sign the subscription agreement ahead of the PMC approval process has led to the situation that we find ourselves in today. In hindsight, the CEO should have done the honorable thing to declare to the PMC that the subscription document and payment memo was signed ahead of the approval process, and the business of the day was the ratification thereof. Now I move on to the process followed in the Sagarmatha IPO. Sagarmatha Technologies Limited, or SGT, is an integrated African technology platform group with aspirations to become the African leader in e-commerce, digital media, and syndicated content and technology ventures as part of the fourth industrial revolution. This company was supposed to list on the JSE in April 2018, and PIC was requested to subscribe for 9.67% of the company for a consideration of 4.5 billion at 39 Rand and 62 cents per share. The funds raised were to be used to build a pan-African media and e-commerce company. Sagarmatha and IO are co-subsidiaries of ultimate effective controlling shareholder, the Survey family, through their Sagunjalo Investment Holding Company. On the 21st of December 2017, Mr. Madawo contacted the listed equities, risk, legal, and ESG teams to alert them of an IPO with a target date of February 2018. He also told them to get all internal process done ahead of that date. On the 22nd of December 2017, Mr. Siani asked Mr. Madawo to give him details of the person to contact at Sagarmatha. Mr. Madawo duly gave him the contact details of the CFO, Mr. T. Howe. On the 11th of January 2018, the Sagarmatha team came to the PIC and did an extensive presentation on their vision for the company and their credentials. Initial assessment by the PIC team was that this set of individuals did not have the experience to execute the grand vision presented. In other words, they were presenting to us that they wanted to build this Amazon/Facebook, everything else of Africa, and they were going to use this platform to build that. The intention was to create an e-commerce and media company on the JSE and later list it on the NASDAQ to attract tech-savvy investors who were willing to pay higher multiples for the growth strategy of the company. On the 12th of January 2018, PIC received a draft prospectus, and this indicated the potential sale of the unlisted interests held by the PIC in independent news media South Africa to Sagarmatha. This was later moved in the final prospectus. I'll touch on that in a couple of paragraphs. Independent media had a negative EBIT of 22 million Rand in 2017, but a revenue of 1.647 billion. Startup tech companies are usually valued on price to sales ratios since they are not yet profitable. Perhaps the intent was to get a price to sales multiple on the revenue of 1.647 billion. On the 24th of January 2018, permission to do due diligence meeting was held, the PMC won. The resolution was not to go ahead with the DD, but to do further work on the valuation of Sagarmatha and the assumptions presented. It was brought to the attention of the PMC that PEPS, FIP, and IC had made a resolution that the consideration received for independent media South Africa cannot be through a swap of shares. So Commissioner, I revert back to the previous comment that it was removed from the final prospectus. So I would assume that the message was taken across to Sagarmatha that thou shalt not exchange your liability with shares in Sagarmatha, and hence it was removed from the final pre-listing statement.
Can you explain that swap, please? Can you explain the swap?
Yes. So I don't know the exact amount, but let's say it was 1.5 billion or something that independent media owed to the PIC in terms of a debt or whatever the instrument was. In that first draft, the view was that that would be repaid using the shares of Sagamata, but then it would be like robbing Peter to pay Paul, so because here is the PIC's own money being used to pay back that debt, and I'm sure if the client was asked that question, they would have nothing of that as well. But,
Okay.
to be fair, Commissioner, I think our internal committees, the IC and PEPSFIS, had made that decision as early as the first week of December of 2017. And I think that is what transpired. On 22nd of March 2018, Mr. Siani asked for details on how the external valuations were done for the draft prospectus. The company sent him detailed valuations done by Redwood Valuation Partners and the University of the District of Columbia, both from the United States of America. These were experts in the field of valuing tech companies. On the 28th of March 2018, Mr. Siani informed Sagamata CFO Takurswa Howe that the valuations were too rich and the listing price should be reduced. In other words, Commissioner, what we saw in those valuations of Redwood and University of Columbia, they assumed that Africa is similar to the US with similar GDPs and ability to deploy and grow the business and bring back to that 39 Rand something value that they proposed. And we felt it was stretching the truth a bit too far, and we had a more conservative valuation. On the 4th of April 2018, Company Secretariat requested that a special PMC should be held on the 6th of April 2018. Mr. Siani emailed the other teams to make sure that their reports are ready by then. On the 6th of April 2018, a special PMC was held and the deal team indicated that listing price is too high at 39 Rand 62, and we should subscribe at or below our intrinsic value of 706 per share. This valuation was reviewed by Mr. Verghese, Mr. Malabatsi, and Mr. Madavo. Commissioner, if I may add some color, because you will say, why did we agree to subscribe at 706? That was our intrinsic value, and the CEO was pro the deal, and our valuation indicated otherwise. So it was, if I could use the word, a diplomatic way of saying no to the deal by putting an intrinsic value, which is actually our real intrinsic value, but there was a big valuation gap between the 39.62 and the 706. So by virtue of that, then the deal couldn't go through. So that was our thinking when we put it into the PMC document.
So basically you wanted to kill this deal by the valuation?
Yes.
Okay.
Yeah.
All right.
The PMC resolved to subscribe if the price is 706 or below and enter into a put option and not pay a dividend. The Assistant Company Secretary notified IC of the PMC resolution that morning and requested their availability for a special telecon that morning. On the 10th of April 2018, the IC telecon was held. IC pushed back the decision to management to deal with the matter, which was within the DOA, and instructed that no deals of more than 1 billion Rand in future should be scheduled for approval by a telecon. Sekunjalo sent a downside protection agreement to the PIC to consider, along with the collateral they would provide.
Can I just go back to 1715?
Yes, ma'am.
And the IC decision to push back to management. It's not whether something's within your delegations of authority. I would have thought. It's a question that this matter had come before the IC, and clearly by pushing it back, they decided it wasn't their decision to take. Given the information and the differentials between what the CEO was willing to do and what your team was willing to do, how did you view this, and had this happened previously? Because the way I would read it, it's an abdication of responsibility. You had something before you, yes, technically you could have pushed it back, and you did, but you also had a responsibility to do the right thing. You had this kind of position put to you. So had this kind of referral back occurred before, and in what circumstances, or are you not aware of anything of that nature?
Commissioner, I can't recall something at this point in time, any other pushbacks, but I would assume that sometimes IC would say, yes, we agree with the PMC decision, but please note it is not our job, it's your job, it's within your DOA. I think that's how I would interpret this paragraph here. Then, on the 10th of April at night, at 8:07 p.m., the CEO, Dr. Majila, emailed Mr. Malabatsi, Mr. Madawa, and Mr. Siani, stating, "Dear colleagues, we have been able to move closer to our base case. The deal now is to subscribe for shares worth 3 billion at the proposed listing price and also get full downside. Sagarmatha will provide us with a Rand 1 strike call option on a number of shares. That gives us an average price of 8 Rand 50 per share. Price exercisable on the date of listing. This will put our shareholding at about 32%. If the price of 39.9 holds, then our value will be quite significant. Please prepare a submission on this basis. We will firm up the numbers as soon as a letter is received from Sagarmatha." In my view, Commissioner, this still would not have flown because the 8 Rand 50 is north of our intrinsic value. Now, on the...
If I may ask, who negotiated this deal that was referred to in Dr. Majila's email?
Commissioner, my understanding that there was a letter coming from the Sekunjalo group to that effect. On either the 10th or 11th of April 2018, the listed equities team who was involved in this deal, Mr. Siani, Mr. Verghese, Mr. Malavatsi, and Mr. Madhav, met with Dr. Majila to convince him the price is too high and we are not happy with the collateral. He reluctantly agreed and he promised to inform Sekunjalo.
Sorry, just on that.
Yes.
Because obviously the JSE comes to the party
Yes.
after that. Was he willing in that, let me ask it differently, was he willing to pay a price and it didn't really matter what price as long as 3 billion Rand was raised? Was he willing to say, okay, it's 8 Rand 50, but he'll talk to Sekunjalo, maybe it comes down a bit and we come to our value that you, or your value that you had put, as long as the total came to 3 billion? Was the 3 billion material to the decision?
Commissioner, my response to that would be that perhaps he was accommodative to negotiate it further down to the 705. But at that point in time, it was the 8 Rand 50 or thereabouts. And besides, they posted a bit of collateral in all the unlisted shareholding companies. And when we looked at it, we said, this is unlisted, this is the collateral you're kind of posting here. We can't put a number to this. To be blunt, I think between the 3 of us or 4 of us, we said, is it worth the paper that is written on, right? So hence we had the pushback. But in my humble opinion, there was an urgency by the company itself to make this listing successful because they had irrevocables from ambassadors and Russian tycoons and whatever else, and other influential families here in South Africa. So perhaps Mr. Survey wanted to save his face and have the listing happen because he promised them a dream of building the next big e-commerce company in Africa. My next section, as I mentioned right at the beginning, that I will be responding to a couple of assertions made by Mr. Siani on what he presented to the Commission of Inquiry on the 30th of January. So in paragraph 19, the following was in paragraph 15 and 16 of his statement. I quote, "In my experience at PIC, I have had no control over the conclusion and recommendation sections of the equity reports that I compile. The essential content of the conclusion and its investment recommendation sections are dictated by Sunil Verghese, Labahang Malabatsi, and Fidelis Madavo, who review these reports. In many instances, this lack of control extends to other sections of these reports, such as valuation. Therefore, the most important aspects of the report, valuation, conclusion, and recommendation, are dictated by my reviewers. My lack of control over and final say on the content of the conclusion sections of the PMC equity reports that I compile particularly concern me in the case of IO, Vodacom Tanzania, and Distel." Unquote. My response: all investment professionals in the listed team are encouraged to express their professional opinion. Reports are usually compiled by the analyst, assistant portfolio manager, or portfolio manager. Before a report goes to a broader forum, such as the listed equities team, PMC, or IC, it is reviewed by the line manager and or her superiors to ensure that the recommendation is arrived at logically. The views are debated by the compiler and reviewer before it is passed on to a broader forum. I believe in giving room to my subordinates to express their own opinion. In my supervisory duty, I have the freedom to debate with my colleagues why I differ with their opinion. Our views are debated and not dictated for all transactions. In the case of IO, the report was largely in line with the request for due diligence prepared on the 13th of December 2017 and draft report prepared on the 5th of December 2017, which in my view was Mr. Siani's opinion. Any revisions made were made in my capacity as reviewer and exercising my professional judgment. In paragraph 20, the following was in paragraph 23 and 24 of his statement. In June 2017, I recommended that the PIC not invest up to 1.15 billion in Vodacom Tanzania, VTZ, at Tanzanian shillings 850 per share, because I valued the company at Tanzanian shillings 683 per share. This was agreed to by all my seniors, and we signed a notification memo on 4th of July 2017, informing PMC of this. However, on Tuesday, 18 July 2017, my line manager, the portfolio manager of non-consumer industrials, Sunil Verghese, sent me an email stating, "We will be holding a special PMC on Monday or Tuesday next week in favor of VTZ. They have agreed to give us a put option of 680 shillings exercisable after 3 years and an underwriting fee of 1%. Hope you can amend the report on the weekend." My response: it is true that in the PMC of 04 July 2017, we decided to not partake in the IPO of Vodacom Tanzania due to a valuation gap between the IPO price of 850 Tanzanian shillings and the intrinsic value of Tanzanian shillings 683. We were then approached by the company, which asked if we would participate if they gave the PIC a put option and an underwriting fee of 1%. We negotiated a 3-year put option that gave us downside protection of 20% of the listing price, protected for any decline in price from Tanzanian shillings 850 to Tanzanian shillings 680, and slightly below our intrinsic value of Tanzanian shillings 683. We then reviewed his original valuation and found it to be too punitive on a company that is a market leader in a fast-growing economy and requested a revision. The revised value, which, whilst conservative, still indicated an intrinsic value of Tanzanian shillings 868 in a country with GDP growth of more than 5% in the short to medium term and inflation of 4%. This was taken back to committee and approved. May I pause here and give some color there? So if you looked at the DCF projections, etc., in the second version, which we can make it available to the evidence team, top line growing in Tanzania in his model, in the revised model, was growing at 6%. EBIT margin about 11.5%. Capital intensity was high, at about 15.5% or thereabouts. And then on that we used, I'm not too sure about the WACC or weighted average cost of capital, around 49% or 15%. And that gave us that revised value. So we were comfortable with that. I mean, it is growing, 6% thereabouts top line isn't too far stretching the truth, Note, by his own admission, in paragraph 24, the wording I used was, hope you can amend the report. This was meant as a request and not as a dictation. If Mr. CNA felt strongly about this matter, he was welcome to discuss it further with me or my superiors, and we would have debated it.
A question? What was he supposed to amend? Which parts of the report was he supposed to amend?
Only the valuation and recommendation, right? Because 683 was his original. We firmed up the numbers, etc., and we got a new number, right? So that was to be revised, and because of that, and now with the put option, etc., it became a more attractive one. So therefore, the recommendation would have been to invest.
And then changing the valuation to 868 Tanzanian shillings, was that something you guys came back to, and why? I mean, is that, from the original time to the new time, what triggered that?
Commissioner, if I may respond, is that originally we didn't have the put option or the sweetener of 1% of the underwriting fee, etc. And perhaps our strategy was also to tell the company, the committee has not approved, so go away and come back. And then we knew that the regulator had imposed this listing on them, and the retail market could not absorb all of that issue. So eventually we knew that they would come back to us, So we were in a strong position to bargain, and hence I think I touch on it in the next paragraph, and I think it'll get a bit more clearer, if I may. Okay. The following was in paragraph 25 of his statement. Given that PIC is a long-term investor and intended to hold the Vodacom Tanzania shares for a long period, more than 3 years, I did not believe that the put option provided adequate long-term downside protection for our clients. I communicated this view to my line manager. My response: counterparties do not ordinarily give downside protection for more than 12 months. We believe that we negotiated well and hard for our clients to get downside protection of 20% over 36 months. Note that share is currently trading at Tanzanian shillings 800. The terms of the option contract is a strike price of 850 Tanzanian shillings and a floor of Tanzanian shillings 680. In simple terms, the PIC is protected for the fall in share price from Tanzanian shillings 850 to Tanzanian shillings 680. Whilst it is a long-term investment, there is nothing that prevents us from divesting at any period in time if there is an adverse change in the investment case. Also, in hindsight, Vodacom Tanzania would have lost its license if the listing was cancelled, and this would have been detrimental to the holding company, which is the Vodacom Group in South Africa, where we were already shareholders. Then paragraph 22. The following was in paragraph 65 of his statement. Given that the IO investment had already been irrevocably entered into by Dr. Dan, signing the irrevocable subscription agreement, my equity report reviewers Sunil Varghese and Lebahang Malabatsi, in accordance with what I deduced to be Dr. Dan's wishes, dictated that the conclusion and recommendation sections of the equity report reflect a favorable investment recommendation for IO. This report was presented to PMC on 20 December 2017. My response: neither Mr. Malabatsi nor I dictated to Mr. Siani what the conclusion should be. If I recall the events of the day, Mr. Malabatsi spoke to Mr. Siani and myself and said that Dr. Majilia has given us an instruction that we prepare a round-robin resolution or the PMC2 report for the IO transaction to be circulated by close of business on that day, the 14th of December 2017. This was duly done. Furthermore, the Commission should kindly note that the conclusion and evaluation did not significantly differ from the request for DD document that was submitted to Company Secretariat on the 13th of December 2017 or the first request for due diligence document that he drafted on the 5th of December 2017. 24. The following was in paragraph 83 of his statement. As a result, on 5th April 2018, I compiled and signed an equity report recommending that PIC invest in Sagarmatha at a price of 7 Rand and 6 cents or less per share, compared to a listing price of 39.62 per share set by Sagarmatha. I did this because I believe that Sagarmatha would not accept 7 Rand and 6 cents, and as a result, probably about its plans to list on the JSE. I believe Sagarmatha was worth closest to the bottom end of my valuation range of 4.39 per share, if not less. Despite this, on the 6th of April 2018, the PMC recommended the transaction for approval to the investment committee, a PIC board subcommittee. My response: the above statement clarifies that we are not in the business of dictating to anyone what their professional judgment should be. We review and recommend changes if it makes no logical sense before passing on to the next signatory to a document. I told Mr. Siani that we should invest in the company only if the price was at or below our intrinsic value, and the appraisal document must state as such. The decision of the PMC reflected the above decision, namely that the PIC invest in Sagarmatha only if the offer price was at or below our intrinsic value of 7 Rand and 6 cents. Para 25. The following was in page 30 of the transcript of the hearings with Mr. Siani on day 6. Mr. Victor Siani: yeah. So the distal transaction, essentially that transaction, I can't remember exactly who said it, but you know, it was my view was that the price was too high, but then the pushback that I got, that in the end overall me was from those above me, and those above me are only 3 people essentially that I received direct communication from on a day-to-day basis at work, and those 3 are Fidelis Madao, Labahang Malabatsi, and Sunil Varghese. Those are the 3 who are the reviewers, and those are the 3 that essentially dictate the final valuation, recommendation, and conclusion. So I can't remember exactly what happened with Distel, because I think that was in early 2017. It is 2 years ago in terms of who I received the information from, but it could have been any one of them. My response: the Distel transaction sits in the consumer portfolio managed by Ms. Matlakala Sekobela. The GM, Mr. Lebahang Malabatse, requested Mr. Siani, who is in my team, to appraise the opportunity. I agreed that he could be released to look at the opportunity. Mr. Siani prepared a document requesting permission to do DD, which I signed as reviewer. For me, I had no issues of signing that PMC1 document as reviewer because I was his boss. The Commission should kindly note that other than me signing the request for DD as reviewer, the entire DD process up to the reviewing of the appraisal document did not involve me. As far as I recall, the day-to-day interaction was between Mr. Siani, Mr. Malabatsi, and transaction advisors, Tirisano Partners, and Mr. Madao. Once the due diligence was done and an appraisal report was prepared, Mr. Siani brought the report to me and asked me to review and sign. I declined to do so since I was not part of the due diligence process and it is not a non-consumer industrial stock, and suggested that he take it to Ms. Matlakala Sekobela, the PM of Consumer Industrial, to review and sign. She also declined, and my view is that she probably was not involved in that DD process. Mr. Malabatsi and Mr. Madawa then came to me and told me that I should review it since I had the expertise in the beverage and brewing sector. I duly reviewed the document in the interest of the team. Based on what was presented to me, the forecast and variation did not look unreasonable, and signed the document and reviewed accordingly. The Commission should kindly note that Mr. Siani did not disclose to me that he did not agree with the valuation before I reviewed the document or any point after that. Let me conclude my submission by stating that the PIC is an institution that I am proud to be associated with. Our performance, transformation agenda, and market leadership in areas such as ESG is something that the nation should be proud of. I thank you, Commissioner, for the opportunity to present today.
Thank you, Commissioner. Mr. Varghese, if I may ask you a question. It appears from your statement that when you dealt with the IO and Sagarmatha transactions, you initially relied on draft pre-listing statements.
Yes.
Is that permissible?
Through you, Commissioner, let me give some color to how some of these IPOs happen. So, ordinarily an investment bank will phone you and say, there is a company that we want to bring to the market. Would you be prepared to see them? If so, please sign an NDA. Then once we sign the NDA, they bring across the company. In certain cases, when they want us to be an anchor shareholder because they need some leverage that the PIC is investing, they do tend to share a draft PLS with us because of the NDA. And then we rely on that draft PLS to prepare the submission for the PMC1. But by PMC2, the full PLS that was released by the JSC is used to verify that the numbers haven't changed and the assumptions haven't changed. So that is our duty. But we make sure that by PMC2, the final PLS has been released by the JSC, which in the case of IO, it was released on the 13th of December 2017 to the market.
Okay, if I may ask another question. In terms of section 6.11 of the JSE pre-listing, of the JSE listings requirements, a pre-listing statement must be formally approved by the JSE before publication. Such approval will only be given if the JSE considers that the information in the pre-listing statement is complete. Is reliance on a draft pre-listing statement not a violation of this section?
Commissioner, my interpretation of what I heard now, it says it should not be published. They have not published it yet. They have given it to us in draft. We take it to our committee for permission to do due diligence on the draft PLS. And an authorized and published PLS that the JSE has suggested is what we do the final check on. If it's received a week earlier, then much the better, to make sure that what we present to PMC2 is using numbers and facts in the published PLS.
Thank you, Commissioner. I have no further questions.
One question. In your paragraphs, the last few paragraphs, you give different versions of what Mr. Siani say. You know, you give your own version. I'm trying, just reading them, I'm trying to find out what you are doing. Is that, are you rebutting? Are you clarifying? Are you, what is the aim? Yes.
Commissioner, I'm just clarifying my point of view.
Mm-hmm. Mm-hmm.
That's all I'm doing.
Mm-hmm.
For example, if you look at the Distel one, he's not sure which of his superiors told him what to do, etc.
Mm-hmm.
And I'm making clear that that as an example, that I had nothing to do with that transaction except as a reviewer. Yeah. And I wouldn't have interacted with the conclusion, etc., or as stated in my submission.
Are there points where you are agreeing or disagreeing with him and all that?
On Vodacom Tanzania, we were disagreeing on our points of view on the transaction only. And for example, I think in his submission, he said in question time when Commissioner Mr. Lediga asked what should be the time frame for a put option, and he said medium to long term because we are long term investors. But the practical reality is that you don't get those long term put options. You will get it for a price, but then it becomes unattractive, So a 3-year at a 20% protection rate, in my opinion, is like, I think if I had to quote my own words, it would be like the Vodacom probably thought they came to see YT Basson as Tiger Brands and left something on the table,
All right, so on that one, you are basically saying the market practice is this. This is not what he said what was not right, because the market practice is this way. Is that what you're telling us?
Yeah, it's a clarification. It's a clarification, yes. That in practice, it will be very difficult to get a put option for 5 years and beyond. And it depends on the size of the company. For example, if you want to have a put option on Naspers for 5%, I don't think this market will be able to afford that,
And then on the issue about the debate of transactions, what are you saying there? Are you disagreeing? Are you...
No, what I wanted to bring to you, Commissioner, is that the word dictate is a liberal interpretation of the Oxford dictionary definition of dictate. So what I wanted to clarify to the Commission is we give, at least in my team, I can safely say I give them the freedom they need to come to their decision. In fact, I can quote Mr. Malabatsi telling me, this kumbaya style of yours, maybe we need to tighten a bit more,
Then you mentioned that you asked him to please amend. You emphasize the word please, if you can. Hopefully you can amend. Would a subordinate take that as a request, or they would take it as an instruction? I just need to understand the culture, the PIC. When you ask, is that an asking, or is that, you're going to do this, I'm your boss,
Well, Commissioner, I meant it genuinely, but I did bounce it off a legal friend of mine, and he said the interpretation can be the other way as well. So I don't want to contest that. Yeah.
Sort of, he could have taken
Yeah.
it as saying,
Yes.
This is my boss, he's
Yeah.
saying I must do this.
Yeah, but I just wanted to clarify what was in my mind when I
Yeah.
sent that statement.
Yes. All right. Okay. Yeah. All right. So it's a mixture of clarifications, disagreements
Yes.
there and there, and issues of interpretation.
Yes.
Okay. All right. Thank you very much.
Do you know who is entitled to be paid a transaction fee?
Sorry, Commissioner, I didn't hear you.
Do you know who would be entitled to receive a transaction fee?
A transaction fee, Commissioner, is paid if we use an advisor to a transaction. This, from what I have seen in certain contracts, ranges between 1% and 2%. And that is also market practice when investment banks bring, listings to the JSE.
I guess what I'd like to find out is whether, if I am the sole shareholder in a particular business and I want to approach the PIC to help me out with some funds for my business, would I be entitled to a transaction fee? I brought it, but it's my business.
I can't respond on that, Mr. Commissioner. We will have to ask our legal department or somebody like that. I can't.
Fair enough.
Yes.
Fair enough.
All right. We're just going to try to ask this question differently on transaction fees. Okay. So when somebody comes and brings a transaction, first point, whom do they pay for those transaction costs, or are they paid by the PIC? What is the general practice?
Commissioner, my response would be, if they are appointed as an advisor, there is a legal contract signed. And then, depending on the success rate, if the transaction goes through, then the size of the deal times the percentage quoted will be the transaction fee. And I can...
percent of the transaction,
Yeah.
or 0.75
Yeah.
or 2% of
Yeah.
the transaction, yes?
Yes. And from my experience, I have done transactions which are in our Africa portfolio, because time and again we are pulled in to advise, because we don't have an Africa portfolio manager at this point in time. So the sector experts are pulled in. Say there is a consumer or non-consumer transaction, say in Kenya or somewhere else, then we are pulled in as long as it's on the listed side. Now, what does the transactor do? He or she or that company brings that idea first to us, number one. Number two, they arrange all the due diligence, logistics.
Just a bit. So I'm talking about when there's somebody, a sponsor, say they want to do an IPO or so,
Yes.
or something, they come to the PIC and they have a transaction advisor already because that person has structured the transaction and all that. Who pays that particular person? I'm not speaking about the one where a transaction advisor comes to you guys. I'm talking about where a sponsor comes to you.
Okay, I get you, Commissioner.
Yes, yes.
So that fee is paid by the company, the company that is raising the funds. So let's take the case of IO as an example. 4.3 billion thereabouts was raised, and then they paid, I don't know the exact amount, but they paid, IO paid those fees to PSG and, is it 3 Loss Capital or something like that? Yeah, they paid.
And does it happen that the PIC ends up paying those transaction fees?
No. Commissioner, no. The shares that we subscribed for, it had a consideration, right? In this case, 4.2 billion. So part of those funds that were raised would be used to pay these advisors. Because remember, that transaction fee also includes getting approval from the JSC, putting all those thick legal documents together, marketing it, etc. So it's part of the cost of raising the funds.
So typically you are saying it is market practice that when somebody raises funds, out of the proceeds of the funds, transaction fees will be deducted from there.
Because
So in effect, if the funder is only the PIC, it follows that the PIC will pay the funds, but if there were other funders, they will pay them on a pro rata basis. Is that correct?
That is correct, Commissioner.
Correct. Yeah, that would be the
because Commissioner, because that 4.2 billion, if it was, let's say, raised from a broad base, 200 people, for example, then the funds raised would still be 4.2, and out of that, now it's sitting in a PTY limited company, right? And that PTY limited company pays the transaction fees.
So it is then, technically then, is that those fees are paid through market practice?
Yes, because...
Would you say that?
Yes, we have a submission which we can give to the evidence leaders, which we put in front of the board or IC, and we go through. And the actual percentage they paid was lower than what Discom paid on its IPO and some other company raised on its IPO. So it was quite market related.
Okay. Can you also just talk about the other one, which you were talking about on the African stuff, when somebody, an advisor brings a transaction, how do the fees work there?
Around the same percentage terms, and it's negotiated. Usually it will be negotiated slightly down. It can be ranging from 1% to 2%. Perhaps if the size of the deal is bigger, we have more leverage to push it below the 1% level. But they do deliver a lot of value for that advisory. And not only did they bring the transaction, they would make sure that other specialist advisors, let's say it's a deal in the electricity sector, and we might not have an opinion, are these assets, from a technical point of view. So they will go and appoint those technical advisors, etc. Then they would also do a model for us and bring it to us, and make sure that the subscription goes through smoothly at the end of the process. If we have conditions precedent like having a board seat, etc., they will negotiate on our behalf to the target company. So they do add a lot of value.
These people, do they bring a transaction to you, or do you look for a company and say you want to invest in EcoBank or something, and then you go and seek advisors? How does the process work?
My understanding it is they bring us an idea, and it is something they thought about with their own connections, and it could be that there's a existing shareholder who wants to exit, and they were trying to find a buyer for that exit, and then they approached the PIC because we have an interest to expand our Africa portfolio, etc. So it's a meeting of minds more than anything else.
And do you pay them on funds raised, or do you pay them on a straight line basis?
No, it would be based, what I have seen, the general practice, it may differ, but what I have seen is depending on the value of the transaction. So if a 5% or 10% of a company is, I'm just using a number, $100 million, and the transaction fee is 1%, then that advisor is entitled to that $1 million transaction fee.
Yes, thank you very much.
Thank you,
Mr.
Commissioner.
Advisor, thank you for your time. It's much appreciated.
Thank you.
Thank you, Mr. Commissioner. Mr. Commissioner, may I just ask for a 5-minute break? Our next witness is available. But I will just like to ask for a 5-minute break.
Let's make it 10, just to be sure.
Thank you, Commissioner.
Adjourn for 10 minutes.